Thank you, Mark, and a big hello from London. Okay, so 2 weeks ago, the phrase sell in May and go away coming in after Derby Day would have been very apt for my commentary, as back then we only had one weekly key reversal in all the 200 odd markets that I watch and follow. Not so this past week. We have seen a lot of weekly patterns, probably prompted by the low volatility seen in recent times, a result of which meant that we didn't need much to make a weekly pattern. So let's look at the ones formed last week and what, if anything, good or bad, have been the resultant moves. I'll start with the currencies, and we had a weekly key reversal down in US dollar against the Indian rupee last week, which has seen a small follow-on lower this week. But, there's always a but we had a contrary weekly key reversal up in US dollar Swiss franc last week, and this also had a follow-on higher. So we had two opposing views of the dollar against two different currencies, and both have seen follow-on moves in each of their respective directions. Looking further, we also had in the currencies weekly key reversals down in US dollar Indonesian rupiah, US dollar Malaysian rupee, and US dollar Korean won. In these last three, we had immediate reactionary moves this week back up in the US dollar. And in the case of the US dollar Korean won, quite a strong move higher, enough to start threatening the topside range of last week's moves. We next had weekly key reversals up last week in the US T-note futures and US bond futures. There were no similar actions in any of the international fixed income government futures that I follow. So it seems it was a US domestic issue, and the response has been limited. The T-note futures edged lower but are still within last week's range, and the bond futures, well, they also had a similar response. And now we move on to stock indexes, and there was only one I saw in the markets I cover. A weekly key reversal up last week in the Chinese CSI 300 stock index. So, despite it being on its own, this week there has been a small follow-on higher in this market. The rest of the weekly key reversals last week were all commodities. We had a weekly key reversal up in NYMEX WTI crude oil futures last week. This week, this past Monday in fact, for a while it looked like we might see a nice follow-on higher. But the market turned around, and prices have dropped enough that if they continue a little further, we might even have an immediate countering weekly key reversal down. So, if we see the market move down between now and Friday's close, below 76.70 and then close either below 78.14 or over 80.06, then we'd have a weekly key reversal. And in the case of a lower close, having gone down that far, it will be an immediate countering weekly key reversal down. The next commodity is a spread between two others. It is the sugar white premium spread between New York raw sugar futures and London refined white sugar futures. This had a weekly key reversal down last week that broke down and closed below some key supports, though not all of them. This move gives us some interesting possibilities, and I cover this more fully in my weekly sugar video commentary that came out on Monday. We next have some metals with weekly key reversals up in LME 3-month aluminium and LME 3-month tin. We've had a brilliant follow-on higher to the weekly key reversal up in LME 3-month aluminium seen this week, making new highs for this year. And a limited follow-on higher at the same time in LME 3-month tin. I covered these more fully in my metals video commentary that came out yesterday. We move now onto grains, and there was only the one weekly key reversal in the grain markets I cover, and it was a weekly key reversal down last week in the ICE UK wheat futures, feed wheat futures. This one has seen an immediate reactionary move back up this week, and I suppose the fact that there were no other weekly technical patterns in any of the other grain markets, either side of the Atlantic, supports the possibility of this being an aberration. I will cover this more fully in my grains and starches video commentary this coming Friday. The final two I will group together, though I wonder if I really should do so. They are animal proteins, and we had last week weekly key reversals up in Chicago lean hog futures and Chicago live cattle futures. The first one is dubious, as due to changeover it only happens on my daily continuous charts. And this week we've seen some gap filling move lower rather than a move higher as a follow-on. So I guess that one still has a question mark over it, as prices still remain within last week's range. The second one, live cattle futures, well, that weekly key reversal up last week has seen some suitable follow-on higher this week, moving up over the long moving average, currently at 179.59, for the first time since the 1st of April, and being a reasonable follow-on higher to last week's move. As always, I'm happy to answer any direct questions of anyone who's interested, and with that I'll finish this section from London. And I hope that you found these comments useful.
Thank you for listening. This weekly broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and at the back of this broadcast. Copyright is Eddie Topic and ADM Investor Service International Limited. And here comes the final important bit.